And we begin with our first story this afternoon. The World Bank describing Ghana's macroeconomic outlook as facing significant risks, a situation that has compelled the government to seek support from the International Monetary Fund. According to a 6th Ghana economic update, despite the country recording very strong growth rates in the last 2 decades, the fiscal economy remains fragile given persistently low levels of domestic revenue mobilization and shortfalls from energy sector state-owned enterprises, which the government has committed to fill. Charles Nixon took part in the virtual briefing and brings us this update.
At the 6th Ghana Economic Update by the World Bank, the Bretton Woods institution clearly indicated that the Ghanaian economy faces significant challenges, specifically on the fiscal front. And the challenge has to do with fiscal slippages and rising debt. And that has threatened the monetary economy, i.e. rising interest rates, rising inflation, as well as liquidity challenges within the economy. So the World Bank urged the authorities to really undertake very tough reforms that will bring back stability into the economy. Some of the reforms include rationalizing expenditure, mobilizing more revenue, ensuring or undertaking the path of debt sustainability, as well as implementing effective monetary policy. All these are targeted at ensuring that the economy bounces back soon. So it was not surprising that the government of Ghana decided to seek economic support from the International Monetary Fund. That comes as a good news because it brings investor confidence and it stabilizes interest rates, which would have a rippling effect on inflation. So the reform that the World Bank wants the Ghanaian authorities to take is to ensure that life is brought back to the Ghanaian economy, which has been struggling for some time now. If you look at the report clearly, comparatively to Ghana's peers on the continent, we are not doing well. You could talk of revenue mobilization, you could talk about expenditure issues, and the World Bank wants Ghana to really step up its game to ensure that the economy, which has been growing quite high, is not threatened by these fiscal challenges.
And new today, government is expected to officially begin negotiations with the International Monetary Fund for an economic program. Officials of the fund will arrive in the country this Wednesday from Washington, D.C. in the U.S. George Yafe has more.
The visit by the IMF team, which is often described as mission engagement, will primarily focus on data gathering from all the relevant sectors of the economy. It will also help the team get some understanding in terms of government's own program that is pushing forward to stabilize the economy or achieve what some may describe as fiscal consolidation. The new IMF is now pushing forward a strategy where any country that requests for a program will come up with their own solutions and then they will give it a stamp of approval. This is to ensure that the expected program gets the full commitment of government and the entire population going forward. After this preliminary engagement, government is expected to put forward an official letter signed by Finance Minister Ken Ofori-Atta and Governor of the Bank of Ghana, Dr. Ernest Addison, on what they want from the IMF. Finance Minister Ken Ofori-Atta is expected to lead government delegation in these negotiations with the fund. Sources say one area that will top on the agenda during the discussions is Ghana's rising debt stock. This IMF team is expected to meet President Akufo-Addo, Vice President Dr. Mahamudu Bawumia, Finance Minister Ken Ofori-Atta, Governor of the Bank of Ghana, Dr. Ernest Addison, officials of the Finance Ministry and the Bank of Ghana, the Finance Committee of Parliament, and some civil society groups before they jet back to Washington, D.C., USA.
Well, former Finance Minister said Tekpa is asking government to make public the exact economic program Ghana is opting for from the IMF. Speaking on the AM show, Mr. Tekpa explained why it is necessary to publish the exact program and gave a bit of insight into what negotiations will entail.
Well, the government is supposed to, when they arrive, that's the staff coming, supposed to give a position, because we invited them, as I said, like the homegrown, and say this is, what we want to do. In the absence of that, since these were agreed, then this is going to be the basis for the discussion.
Okay.
These were agreed with government. There was a staff visit in April.
Yes.
So if the government is not prepared and they haven't told us what they are, I went to Parliament to tell Ghanaians what we're going to put before the IMF. You know, so this, what I am reading now, and I urge Ghanaians to read for themselves. It's now on the website, Article 4, 2021. Let your producers and then we can have a conversation and you see the revelations. So in the absence of our own program, these are going to be the basis. Are you going to put, in fact, they spoke about Bank of Ghana and expect that Bank of Ghana will go back to zero financing. Are we capable? We went to zero financing. Bank of Ghana financed half of the deficit in 2020. They never gave COVID as a reason. They said if they were, it's in the MPC report, again you can download it, that if they were, you know, not to give government support, government would have difficulty borrowing and interest rates will go up. The very thing that is happening now. That was the reason.
And so usually when the staff of the IMF arrive and their deliberations and engagements, are there changes made to the policy document?
Well, eventually, okay, so after the engagement, it will take line by line. It will take what they are saying on revenue, you know, what is the expenditure position, because that is what is leading to the deficit on the fiscal side. So what measures do you have over the 3 years or so of the program, you know, to bring it to manageable proportions so that it stops increasing, you know, the debt, which is a major concern. And they go to the sector, energy sector. In fact, they spoke about energy sector. This document is very important. I urge Ghanaians to look at it. They'll talk about energy sector because the sectors, particularly the World Bank staff that are likely to come, they are interested in the sectors because they give budgets of support to all these sectors. And then they go to the monetary, led by the governor, you know, and they will tell them all the things that they want to do, interest rate policy and all that, all those rates. And they have consultations with labor and other chamber of commerce and all those. Yes, so it's a very broad base, you know. Then they put all this together and then so they'll then come with what they think needs to be done against the government position, right?
Former Finance Minister Tekpe, speaking on the AM show, joining us Dr. Said Wache, who is Senior Fellow at the Institute of Fiscal Studies. Good afternoon to you. Grateful for your time. I'll get your reaction to Ghana's decision to seek support from the IMF. I don't think I've heard your thoughts on that, but I want us to first tackle the World Bank's latest assessment of our economy. And just in case you missed it, the World Bank described Ghana's macroeconomic outlook as facing significant risks, a situation that has compelled the government to seek support from the IMF. It also talks about how fragile our fiscal economy is, given the persistently low levels of domestic revenue mobilization. And this is a grim forecast, further indicating the struggles we are going through as a country. Your thoughts?
Right.
Are you there, Dr. Wache?
Oh, what was the question again?
All right, you missed it. I just wanted your thoughts on the World Bank's forecast of our economy. You're just receiving that news. They had a briefing over the last weekend, saying that, well, there are significant risks to the macroeconomy, also indicating that the economy still remains fragile because of low revenue mobilization. I just wanted your thoughts on that, seeing that, you know, some of these reasons have compelled us to go to the IMF.
Sure, I think I shared all those views. The economy generally is not that fragile because the economy totally is growing at quite a healthy rate as compared to others. If you think about the fact that you just came out of COVID, if you are completely out of it. But the problem is the fiscals. And of course, I've been saying that the fiscals have been weighing down on the broader economy a lot. The private sector has proven to be very resilient. It is moving ahead. It is doing what it can. But the problem is the fiscals, which is weighing down on the private sector. And it is good that the government is trying to take this decision in order to continue to give the private sector a room to operate. Because, you know, the government was finding it difficult to borrow externally and was turning its attention to domestic borrowing. It was even finding it difficult to raise debt domestically. And when such a thing happens, it crowds out private sector lending. And so the government trying to find a solution to the fiscal is the way to go. But the broader, economy is not that bad. that bad. So I share World Bank, understanding their views, except that the emphasis should be placed more on the fiscal than the broader economy.
And indeed, in the report, it says our fiscal economy remains fragile. And judging from your reaction, you think that it is a good move that we are seeking the IMF's assistance to fix our economic challenges, right?
Both, yeah, it is not what I wish the government did, but at this stage, yes, the government got to do that. In the sense that you look at the government, you try to advise for the past year or two, up to 2 years, and we thought perhaps the government could be bold and take better medicine to heal the economy, but the government was not. They went to the periodic launch, they came out, I thought they were going to be real in terms of trying to take serious, hard decisions to face the economy, particularly from the perspective of expenditure. But it looks like the government began to do only cosmetic surgery, not actual surgery that was needed to fix the disease of the fiscals. So at this stage, starting from about a month, I took the decision that no, I'm going to the IMF is the right thing to do, because I don't think the pain, the government is prepared to take the pain itself to heal the economy. And
today we have information that officials from the IMF are expected in the country on Wednesday for negotiations. We played a clip of the former finance minister, Tepe, insisting government must make public the kind of program it wants to run with the IMF. How is that important? Is that priority now? Isn't he jumping the gun by insisting the government makes public the exact program it wants with the IMF?
The program has to be hard before you consider that it's public. Of course, I generally share the view that the government has to come plain, things have to be clear, particularly in regards to IMF, they have to provide a clear picture to IMF. You go to the hospital, as the patient, you understand things better than the doctor. So you have to tell your story very well. Yeah, having had a program, of course, the public will be interested. But before even getting the program, the government has to be plain to the doctors who have come to help us fix our economy. Data has to be available. We do not hide anything. And more importantly, I think the government has to begin to think about a program themselves. IMF is not going to prepare your budget for you. They are going to sit down with you and negotiate. So the government has to have a clear program themselves that with which they will be able to negotiate. So that at least the very vulnerable will be protected in the course of the program.
In your mind's eye, do you have any indication what government may settle on?
Oh, it is going to be a very broad one, particularly when it comes to the reforms. That one, IMF, World Bank, they have bigger say as to what structural reforms have to be conducted. But I'm talking about the fiscals, the expenditure and the revenue, where the government wants it to go. In fact, there are certain indications showing that things like compensation of employees is way above the country's peers. Things like what they call social intervention. You are a poor country. You are finding it difficult to make ends meet. And you are providing things like paying school fees, for instance, for rich people who can afford to pay. So the free SHS, for instance, could be on the line to be reviewed. If the poor can continue to enjoy it, but those who can afford should be made to pay. All these things have to be things the government has to consider regarding the expenditure side. But it is also very critical, and I must say, that the revenue component, you cannot tax poor people and be able to raise enough revenue. People are even calling for reliefs. How do you tax poor people and raise revenue? We have said it repeatedly. All countries, all developing countries, or most developing countries that are doing well, have grips upon their own natural resources. In Black Africa, look at a country like Botswana. It is doing very well. Why? Because their diamonds, the government has grips upon it. They have invested in it. This is when they meet the IMF, they have to negotiate. Look at our gold. It is in the hands of private investors, particularly foreign ones. The same thing oil, in the hands of private investors, particularly foreign ones. the approach of giving resources on concessions foreign investors so that you turn around and try to tax them is not only irrational, it is illogical, but it leads to poverty.
Well, speaking about taxation, sorry to cut
in.
in.
The Middle Eastern countries, you know, they are rich. Why? Because they have hold of their resources. They have invested in it. So when the government is negotiating regarding revenue, that's where the emphasis should be placed.
Well, speak about revenue. Government has been mounting a strong defense about the decision to seek IMF support over the weekend, blaming the opposition, blaming the public for not supporting the e-levy enough and other programs by the government. Is that why we are in this mess?
The e-levy, if they had even had the 7 billion they projected, wouldn't have saved this country. It wouldn't. The fiscal hole is bigger than the e-levy. I might be frank. Perhaps it could have helped. If they had raised, it could have helped. But the fiscal debt, the fiscal difficulties are bigger than the e-levy. You understand that? Because so much rigidity, limited revenue, e-levy. For instance, Ghana's total revenue to GDP is around 15%. Even in Africa here, it is more than 20%. Middle income countries around 22-23% on the average. E-levy couldn't have raised government revenue to GDP ratio to even getting to 18%. And not much was being done regarding expenditure. So e-levy couldn't have even saved the country if what they expected they were able to get.
My final question, does this support from the IMF really solve our problems? Is the 17th program, if we go ahead with this deal, we keep going back. So what must we do?
What we must do, I've talked about the revenue component. You want to do well, get hold of your resources. Stop the concession approach. You give your own resources and you put it in the hands of private investors. Look, if I establish a company with my own raw material, everything, the government is going to tax me. Why should the government give its own resources to people and turn around to tax them? Basically, you're giving it out. So on the revenue component, that is what the government should do. But on the expenditure, in the long term, the extreme politicking has to stop.
Okay.
Hold on, let me continue a little bit. You know, people have been talking about fiscal difficulties, you know, fiscal slippages. It is because of politicking. You keep on promising what you cannot afford. If you do not stop that, both the ruling party and opposition party don't sit down to get things going, Ghana, if even this problem helps in the short term, Ghana will return to the same problem from the perspective of spending.
Thank you so much, Dr. Said Bachi. We've got to go. I appreciate your time with us. Senior Fellow with the Institute of Fiscal Studies. I appreciate your thoughts this afternoon. Let's turn to the markets and get reactions from there. Joining me, Patrick Edem Agama, who is Head of Trading at Republic Securities. Any reactions yet on the markets to government seeking IMF support?
Okay, good afternoon. Yes, we saw some reaction, some level of reaction on Friday. It was just a very quick form of reaction where we saw that some rates are beginning to stabilize and drop. And also for this morning, we are seeing on the fixed income markets that most of the secondary rates are dropping slightly. However, this is really dependent on the details of the IMF program and how the government is able to react to it. Investors are also looking at the mid-year budget review and June inflation as some key determinants of where the market will go moving forward. And
T-bills were oversubscribed last week at the end of the auction. Tell us a bit more.
Yes, we saw the government raised 827.5 million Ghana cedis against a target of 529. The target was relatively low. This is because of the space they were making out for the cocoa bill that was issued on Thursday. So we saw a jump by 56%. The 91-day T-bill closed at 25.88%, which was just about 24.3 basis points. So it should tell you that the rates are also slowing down from that angle. We saw the 182-day jumping by 17.1 basis points to 26.57. It is also an indication of where the rates are expected to be this week.
And my final question to you has to do with the stock market, and it concerns a story you're going to be running very soon about the Chamber of Mines beginning discussions with the Ghana Stock Exchange to get local investors to inject capital into mining activities. How significant is this?
Well, it's a great news. It's a great news. Our market is largely owned by the foreigners. So we're having local participation is a very good news for us as a market participant. We've been waiting for these kind of decisions for a very long time. It's going to keep the market very vibrant, to increase liquidity, and to prevent capital flight. So we expect the market to be more efficient when locals own it than the foreigners. So yes, it's a very good news.
All right, we'll end it here. Patrick Edemagama, appreciate your time. Head of Trading at Republic Securities. Will get in touch in the course of the week for some more updates on the Ghana Stock Exchange. Now, the Chamber of Mines, like I indicated to Patrick, has begun discussions with the Ghana Stock Exchange to get indigenous investors to inject capital into mining activities. According to the Chamber, this will help boost the country's earnings from mineral resources. Chief Executive of the Chamber, Suleiman Okoni, told some selected journalists that this is the way to go in making Ghana a mining hub. Here's more in this report.
Ghana's mining sector is dominated by foreign investors, signaling low interest by indigenous investors to direct some capital into exploration. According to the Chamber of Mines, having indigenous people invest in exploration is the way to make the country the mining hub for Africa. Chief Executive of the Chamber, Suleiman Okoni, disclosed that the Chamber is engaging the Ghana Stock Exchange to find some solutions.
Indigenous capital for exploration, business in Ghana, I think it's critical. That is where it all starts from. Other countries have done it. Why can't we do the same? We're having a conversation with the Ghana Stock Exchange as well as the Securities and Exchange Commission under the aegis of Minerals Commission. Hopefully we would be able to come up with a framework that will allow you and I to put our money into our own endowments, because the mineral resources belong to us. And why would we have someone pour his pension funds into our economy, and we are sitting around here and we decide not to do that? Yes, there's room for FDI, but there should be room also for indigenous, investment, and that is what we are calling for. That is where it all starts from. The opportunity for value creation at the exploration stage is much, much bigger than most other phases of mining. So that is where the target should be. And the good thing is that I think that generally the Ghana Stock Exchange actually agrees with us.
On the concerns of security at the mining concessions, the Chamber fears the activities of illegal miners and intruders are impeding the growth of the industry.
We're getting good collaboration with governments. Governments, especially our sector ministry, is partnering with us to find a sustainable solution. He did a fantastic job by making sure that the vacuum created by the withdrawal of the military was actually addressed by making sure that we had police deployed to the mines. But we still have lots of challenges. It's not the ideal situation for us. So we continue to engage with our ministry and the security services to give us what we really deserve as an industry. So there again, there are some good recommendations that have been made, and we are actually pursuing these.
The sector has started picking up in the first quarter of the year as a result of the reduction in the withholding tax for small-scale miners.
And that's the marketplace this afternoon. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. Ghana's macroeconomic outlook faces significant risks. That's according to the World Bank. You can read more about that. And World Bank appoints Ghanaian Victoria Kwawu as new Vice President for Eastern and Southern Africa. More on myjoyonline.com/business. Back same time tomorrow. Do stay tuned.